Welcome to TheoTRADE. This is Don Kaufman. It's August 15th, 2025. Minutes to go to the cash close here on this Friday afternoon. The S&Ps, they're down slightly. The Nasdaq taking a little bit of a hit, but they're loving the Dow. There's actually some decent sized rotations underway throughout the course of this week, which I'm going to display here in just a moment. But look, from my perspective, that is it, people. Summer is over. Buckle up. Volatility is going to be making a comeback. Look, we're turning the corner. Here we are now in mid-August, and this is where we typically turn the corner and see some more volatility. So I'm actually going to cover that and much more here, of course, on this TheoTRADE weekend update. All right, let's get started here. So S&Ps are down some 15 handles right now. Trade's been chopped out, disconnected, kind of broken feeling today. There's, as I said a moment ago, some fairly big rotations underway. But I like to start here in the SPX because in the SPX, really what this trading week kind of came down to, as it pertains to the S&Ps, the marketplace did absolutely nothing on Monday. On Tuesday, okay, we flew to the upside. Little CPI to actually spark initially what was going to be some sell side activity right up until they bought it. So here we are then on Tuesday, and then coming into Wednesday, Thursday, and Friday, it's been all about the upper edge of the expected move. And I'm just going to snap back over here to a 5-day kind of 1 minute. When I say it's all about the upper edge of the expected move. So here we are on Wednesday and riding the upper edge of the expected move. Here we are into Thursday, riding towards the edge of the expected move. Here we are on Friday, hit the upper edge of the expected move, slipped a little bit. But again, that's kind of been the week at large. Doesn't display that much because if you're just looking at the S&Ps, I think you'd be missing some of the rotations that are kind of underway. So once again, we are at the upper edge of the expected move. And I say that because where were we last week? I was saying basically the same thing last week as Thursday and Friday of last week came right down to the upper edge of the expected move, tried for the corner and missed. We ended up very slightly above the upper edge of the expected move. This week, it was a $90 implied movement, and we're actually inside the expected move, but not for lack of trying. Again, hit that upper edge, kind of reverted back down off of it. All right, let's get down to business. There's been some rotation, and that's why I'm like, that's it, summer's over. So buckle up. Now, I've seen some rotations take place, okay, in the last couple of weeks, and I've pointed them out, and it's been like, between tech and financials, and all of a sudden, tech, it wasn't doing anything, and then tech, okay, it got hit, came back absolutely huge, and tech came ripping back. But tech this week is soft versus the S&Ps. Let me display this by bringing up the QQQ. So I'm bringing up the Nasdaq, and I can get really specific. I've actually even got like a monsters of tech symbol over here, but let me get really specific, because if you look at underlyings like Nvidia, all right, that hasn't moved in basically 2 weeks. Nvidia just hasn't made a lot of price action, but it's really the QQQ overall. What I wanted to show you, okay, in this particular instance is right here. The Qs are just mildly higher on the week. Like, okay, so a little bit of a rally inside of the QQQ. Then, of course, we look over at the S&Ps, which we were just moments ago. The SPX is right towards the upper edge of its expected move. And then, lo and behold, if you bring up like IWM, the Russell, absolutely a wild week. I mean, they were apparently giving stuff away in the small caps this week because it had like a 2 standard deviation move. It's contracted to some degree. Yeah, you got me there. It's contracted to some degree. But these rotations, they're wild. And then, I never talk about the Dow. Normally, I don't really care. Look at this. We're buying Dow. All right. Warren Buffett had a lot to do with this because United Healthcare is in the Dow. Okay. But the Dow, even before United Healthcare, was smoking to the upside. So pay really careful attention to this. Why? Because what we have right now in the marketplace is, the S&Ps are down like 18, 19. There's no correlation whatsoever. It's complete correlation kind of breakdown. What that means is inside of like the S&P 100 or the S&P 500, okay, it's just sector rotation, sector rotation, sector rotation, and the rotations are getting a little bit manic, if you will, unusual. In this particular case, like financials this week, I'll also point out financials this week led, okay, markets higher, and then yet are breaking down today. There's a lot of things on the screen in here that, kind of reek a little bit of some volatility starting to break through. But the one thing is you're not going to see like volatility make a move higher. Why? Because when you're getting rotations like this and the advanced decline lines like 50-50, okay, the rotations are actually kind of locking the marketplace in a relatively tight range. Now, again, granted, we're higher this week, and we are higher this week, okay, but marginally so. I mean, net, the S&Ps, they're going to finish the week, and again, it's not exactly over, but it's over. They're going to finish the week about 70 points higher, specifically inside of the S&P futures. If we actually bring up a 30-day 1 hour, if you go to the 30-day 1 hour, we are outside, okay, what has been a very tight volatility channel. The upper edge of the volatility channel has been basically at 64.50. Okay, and again, I want to kind of detail this because I've been bringing up this chart quite extensively. In fact, I'm going to go to 180-day 4 hour, kind of zoom in on this one a little bit, kind of box it out. Most of the trade we've actually seen has been in an incredibly tight range recently. Okay, right in this neighborhood here. And that range is literally 62.50, okay, to 64.50. And, ironically, we're above it. We hit above that all the way to 65 and change. But look where we are now, okay, just a hop, skip, and a jump kind of north of that. And again, I'll zoom in even tighter on it. All of the trade, okay, all of the trade that's actually occurred in weeks and weeks here, going all the way back to early July, is inside of an incredibly tight range. Now, we popped outside of it, okay? Watch this very, very carefully. It's my assumption, okay, that we're actually going to drop right back into this box of trade. If not in the next few minutes, literally, the next 7 minutes, we're going to drop back into it early next week. And if we're back inside of the range, well, then it's just a matter of actually pinging all the way from 64.50 all the way back down to 62.50, which you've actually seen that cycle a couple of times inside of here. So again, I'm not into cycles or anything, but I am into the fact that this is what we kind of term a little bit of a volatility box, and you have tendency just to kind of ping back and forth with markets kind of looking for any exogenous event that can kind of, sink their teeth into. So keep in mind, again, I've detailed those levels time and time again. I will also detail that 62.50 is an absolutely critical level. Okay. And it sounds crazy. You're like, man, we're trading all the way 64, 70. Yeah, well, I'd keep an eye on 62.50 because once you drop back into the box, if you get below 64.50, okay, there's no difference between 64.50 and 62.50. Like, you'll ping right back and forth. Keep it in mind. All right, onward. So you're getting significant rotations, and it's definitely got me kind of watching. But for me, it's like when I say summer's over. Look, kids are back in school. Okay, summer's over. It doesn't matter that it's 110 degrees here in Arizona. Summer's over. And whenever I think about like mid-August, I start looking at September, which is historically speaking, okay, the most volatile month. I start looking for like, okay, when's the volatility coming back? And if everybody knows there's going to be some volatility in September, what do they start doing? They start creating some volatility like in August. Well, guess what? We're into the the latter portion now of August. It's not mid-August anymore. Well, it is mid-August, but we've turned the corner. We're actually coming in there, and volatility will start to make a little bit of a comeback, right? Let's kind of continue on with that, and I'll come back to vol in just a moment. Now, here's an area not enough people are actually talking about in the marketplace: bond markets. Okay, the talk of the whole trading community has been about the interest rate cuts and then the CPI. Okay, so the CPI comes in, and what do you got? It's still fairly hot. You had more data than you had PPI that came out. So Again, the CPI caused markets to actually spike a little higher. PPI caused a momentary lapse of reason. I mean, the selling around the PPI, okay, which is the producer price index, which no one actually knows what that really is, but it caused a little bit of sell side activity for like 5 minutes. We bid back up. Listen to me. Push all that crap aside. Stop trying to assess what the numbers mean, because quite frankly, none of it matters. What matters is how come the bonds are actually seeing some sell side activity? Huh? Have you been looking at that? Have you? Okay. No, nobody seems to be looking at that. And yet that's what everybody should be looking at, because all we're talking about all freaking week is what are they going to say at Jackson Hole Symposium next week? Okay. Well, I'm going to talk about that, but I'm going to tell you right now, interest rates this week went higher, quite a bit higher too. Okay. Don't take my word. Just look. Interest rates went higher. You go, well, oh, but the Fed fund futures, they're pricing in a cut, and there's going to be a 25 basis point cut. Yes, but this is the 10-year, okay? And the 10-year went from 4.2%, okay, and shot up to 4.3%. Now, from where I sit here, I think we're actually going to go all the way back to 4.5%. You may not want to hear that. It doesn't matter what you want to hear. The reality is they look like they're actually poised. I think some bond vigilantes are going to come back in. And what you got is some sell side activity in the bond market, and sell side activity in the bond market equals higher interest rates. So even though we're talking about, but the Fed is going to cut, people, the Fed could cut 50 basis points. Well, hell, the Fed could cut a full point. Who cares? All right? Because the Fed is not, finger on the trigger, not yet anyway, for the 10-year and the 30-year. I mean, eventually they might do that because it's called yield curve control. How'd that work out for Japan? Anyway, you take a quick glance at this. I think we're going to have a massive steepening of the curve, which actually means that the 10-year, okay, is actually going to go up, okay, and the near term, which is like Fed fund futures, are going to go down, which is it's not really good for things like like mortgages, real estate, and so forth. Anyway, interest rates actually went up this week, so all the talk about like a cut is coming, it's for nothing. It's absolutely for nothing. And you're like, I spent too much brain power thinking about that, and you probably did. Interest rates slightly higher this week. Again, my expectations, they're going to continue. I would not be the least bit surprised. It'll take a little while, maybe a couple of weeks. I wouldn't be the least bit surprised that we test in the 10-year 4.5% again. So keep it in mind. All right. Well, we'll test me on that one. So a cut is coming, except rates are moving higher. Now, I was talking about a moment ago, buckle up, vol might be making a little bit of a comeback. As we turn the corner and, out, through August into September, I start to really pay attention, especially when there's low volatility, I start to pay attention to stuff like VVIX, okay? VVIX, the volatility of VIX. It's actually been higher. Interestingly enough, it even cracked 100 this week. 100 is not like the marquee level. Like this 110 is the marquee level for me, okay? It's what I call the VAMA zone. That's when crap gets, it gets real up there. Nevertheless, it's off the floor, and the floor being down here like 88, 90. So the VVIX is actually amped up a little bit, but nothing else actually has, nothing, okay? And a big reason why, so like VVIX, what's that really mean? It doesn't mean that we're going to tank. I'm sick of people, oh, that means we're going to tank. It doesn't mean we're going to tank, okay? It doesn't help. It means that institutional trade is very quietly in the backdrop. Okay, they're buying up some hedges, just starting to buy hedges. And where are they buying those hedges? Well, VVIX only measures one thing. It measures volatility of VIX. So what are they doing? Okay, they're trading right here inside of the VIX. And the VIX today actually traded some decent size. 760,000 contracts, can't be wrong. When you look at that thing almost did 1 million contracts. You look at something like, Google's not a good example. Okay, there's the closing bell. It's all over. Okay, it's over, man. But if you look at something like Amazon, it traded like 800,000 contracts, just to give you an idea of like the ballpark. But VIX traded some size. And what this really kind of means is somebody's buying some back month hedging. And maybe not necessarily today, but they've been doing it pretty consistently because, and you're like, well, why is that going on? Because we're turning the corner. As I said, we're turning the corner and volatility will come back. It doesn't mean we're going to be like raging volatility. That doesn't necessarily mean, you have to be a big bear, okay? But it does mean you have to start to pay attention a little bit. As we turn the corner, we're going to see more volatility coming into the month of September, right? So, all right, quietly, okay, buying volatility. That's why I was looking at the VVIX. Now, completely switching gears, we saw some kind of wild rotations, in my opinion, inside of the markets, even though the S&Ps ended at a pure 50-50. Okay, so we're at this 50-50 advanced decline line, but it's like rotate, rotate. And it's interesting because the QQQ, the Nasdaq, did not perform that well. The Dow performed really well. The IWM was like incredible. All of a sudden, we're like small caps, and I know everybody gives me a reason. It's because CPI. Okay, that's great. Thank you very much, Captain Obvious. Okay, but it doesn't necessarily describe some of the other moves you're seeing in here. Okay, and this is where things starting to get a little bit crazy. Okay, I'll actually bring up, for example, gold. All right, gold throughout the course of this week. What do we got inside of gold? Well, bring up auto expected moves. Gold actually cracked, okay, to the downside of its expected move this week. So outside the lower edge of expected move. But one of the more interesting areas of markets happened to be, to me, crypto. So crypto initially, like, it ignited off of like literally out of the gate this week, but really ignited kind of midweek. Huge reversal. Watch this into next week. Okay. And the reason I'm going to tell you to watch crypto, because there's a lot of people in here that are like, whatever, man, crypto and crap like that. I don't even trade crypto. Well, that's great. Except crypto now is trading on almost every major trading application, which means it's going to have a much higher correlation, okay, than it probably has in any other recorded time. What I mean by that is, look, okay, I'll make this very, very simple. If Bitcoin continues to see some sell side activity, let's say it cracks, for instance, 110,000, okay, all hell can then break loose inside of the S&Ps, because what's actually going to occur is that there's going to be crossover. People will actually have to sell, positions to keep, for instance, some of their crypto positions, or they're going to have to sell crypto, or both sell crypto and other positions. Once you start listing, this stuff like crypto on applications like a thinkorswim or like a Tasty, or all of a sudden you're trading like ETFs, on Fidelity that are crypto kind of based, the crossover of products. And when I mean crossover, your margin and everything, it's all one and the same. The correlation is actually going to pick up. And I'm telling you, this looks like some real sell side activity, in Bitcoin from yesterday. There's a little bit of follow through in today's trade, but nothing really to speak of. Like, look, it's down like 1%. 1% in my opinion is absolutely nothing. But it was pretty fierce yesterday. The volume really picked up. Let's see if there's follow through to the downside. I believe that's actually going to spark a little bit more volatility in the S&Ps than people kind of give it credit for. All right, so I put crypto and tulips. What does crypto and tulips have in common? I'll leave that one for you guys to decide. All right, next in the docket here, everybody's talking about Jackson Hole. The Jackson Hole Symposium is coming. Oh my. So we have a bunch of people, that are probably some of the driest people on earth, drinking together in Jackson Hole, all on your dollar. All basically the bill goes to the Kansas City Fed, though. If you're kind of curious about that, Kansas City Fed is actually the one that hosts it. So and the best part is we actually have central bankers coming in from all over the world into Jackson Hole for the symposium. Look, net, it doesn't mean a damn bit of anything. You actually have if you look at the calendar next week on Friday. You actually have Jerome Powell speaking in the morning. Tracks the upcoming appearance, of the head of the Federal Reserve, yada 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 yada. But the Jackson Hole Symposium, it's just a lot of that doesn't really kick off, until really the latter portion into the weekend. So markets are not really pricing any kind of crazy volatility for Jackson Hole. In fact, we're going to look a little bit more detailed in the SPX in a moment, but I'm going to point out initially, if you go like 7 days out, there's a little bit of extra volatility packed into Friday. But look, I think the easiest way to say this is, what do you really think they're going to say in Jackson Hole? Like, seriously, you want to see what they're going to say in Jackson Hole? Well, this is the Fed Fund Futures probability right here. September got as high as like a 96, 97% probability. I mean, look, yesterday it was like 94%. It's dropping right now. What am I talking about? 85% probability, 85% chance of what? Of a Fed rate cut. But that was as high as 90 some odd percent the other day. I mean, literally, it was like 95% the other day chance of a cut. It's actually coming back down. Interesting, okay? But it's still an 85% probability. Like, what do I need to hear from Jerome Powell other than, ooh, we're considering an interest rate cut? I just told you a moment ago. Interest rates did what? They went up. Okay, you look at the 30-year, the 10-year, they went up. I don't care what he has to say. I care what the bond vigilantes are going to do to the bond market. So here's a case where let the marketplace do the speaking. Okay, there's no reason to tune into the Jackson Hole Symposium. It's a media craptastic event. That's it. Nothing more, nothing less. I pulled out some trades this week. Speaking of the bond market, I pulled out a nice trade yesterday. I got bearish inside of the TLT looking for this to break down. It did. I closed the trade for a 30% gain. I also had a nice one on Altria Group this week. Altria Group actually caught that midweek for a quick 30% gain on that one. But look, the one thing that actually is kind of striking this week is there's two-sided trade actually returning to the marketplace, and I will take that all day long. When I say two-sided trade, that means the markets go higher and they go lower. How about that, huh? You didn't think that was even possible. But when you start to look around at a couple tech stocks, you see exactly what I mean. Like NVIDIA kind of flattened out. There's some big ranges in here. If you take a look at like Tesla, okay, huge pop last week, fading this week. Take a look at the auto expected move, massively unchanged in the week, but some sell side activity starting to hit in there. Take a look at Broadcom, massively unchanged on the week. As I said to you, okay, you sit tight. There's some volatility on the way. Now, last but definitely not least, we jump back to the SPX. Come back to the SPX. The SPX did hit the upper edge of the expected move. Basically, the week came down to the upper edge of the expected move, faded a little bit of it off of there. So I want to be very, very clear. We started the week, okay, roughly at, we'll call it like 63.90. We ended the week right up here at 64, basically 50. So what do you got? As I said earlier, it's between 60 and 70 points to the upside. That's a meager week. Yes, the market tracked higher this week. It's a pretty meager week. And when it comes to like the Nasdaq, okay, the Nasdaq really almost much of nothing. Is almost massively unchanged in the week. But next week, even though I'm talking about volatility and we're going to turn the corner, watch this next week for VVIX to come back up. Watch a lot of the volatility indicators. I assume volatility is going to start to really make a comeback. But one of the things that I'm kind of surprised by, we just passed through a week that had about $89, $90 expected move. Next week, we're looking at about the same. So you can say whatever you want about the Jackson Hole Symposium. Okay. Well, look, we had CPI this week, we had PPI this week, but next week and all of next week only has a $91 expected move. I said this last week, and I'm going to say it again this next week. I'll take the over on that one. Okay. In my opinion, I wouldn't be selling any short-term volatility. I would not be selling any short-term volatility this next week. There's too much on the line. Like volatility doesn't go much lower than 9 or 10%. So there's only one way vol can go, and that's it's possibly higher. Again, there's a lot. There's a lot in the tape always. In terms of like economic events, I wouldn't look for that. Okay, markets right now, okay, they're not correlated. It's going to take some type of exogenous event, just a little bit of a shock, okay, in any way, shape, or form. This marketplace is going to be rocking once again. That's why I'm saying, look, summer is over. Buckle up. Volatility will be making a comeback. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.